Apple has done it again. Apple is not growing, Apple is buying back a ton of shares, Apple just increased their dividend payout, and so Apple stock has gone up by 6% at the time of making this video. Apple is worth over $2.7 trillion, has a forward PE of over 26 times right now, which is above the 5-year mean. But of course, for a company that is not growing, I mean, that's quite a hefty premium, don't you think? If you look at EV to EBITDA, over 19.5 times. Price to sales, probably closer to 7 times. Price to free cash flow, 25 times. Price earnings to growth, 2.5. Now, again, this is a company that is buying back quite a lot of shares, that is paying a little dividend. Yes, that dividend payout has increased throughout the years. So yes, there is some value to it when you are a shareholder. For the last 10 years, shares outstanding have decreased by 36%. So there's definitely some value to be gained there. But don't forget, in the last 10 years, the company was growing, was becoming bigger and bigger, generating more revenue, generating more free cash flow, more earnings, etc., etc. But in the last couple of quarters, maybe even the last 2 years or so, the company has not really grown that much. More on that in just a second. I first want to go over the CEO's comments here. So today Apple is reporting revenue of $90.8 billion for the March quarter, including an all-time high revenue record in services. During the quarter, we were thrilled to launch Apple Vision Pro and to show the world the potential that spatial computing unlocks. In my opinion, a complete flop. We're also looking forward to an exciting product announcement next week and an incredible worldwide developers conference next month. I think next week is probably going to be an iPad reveal, and then the worldwide developer conference is probably going to be more AI products coming out. That's just my opinion. As always, we are focused on providing the very best products and services for our customers and doing so while living up to the core values that drives us. With regards to the CFO, given our confidence in Apple's future and the value we see in our stock, our board has authorized an additional $110 billion for share repurchases. We're also raising our quarterly dividend for the 12th year in a row. I mean, $110 billion in share repurchases, that's an additional, by the way. Imagine how many Rivians they can buy with that. The board of directors has also declared a cash dividend of 25 cents per share of the company's common stock, an increase of 4%. Now, before continuing and going over the numbers, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, would really appreciate that. Of course, try and make your case about Apple or whether or not you're choosing another big tech company. Let me know down in the comment section below. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's have a look at the numbers, shall we? We can see here sales decreased 4% year over year and 24% quarter over quarter. Of course, we know the previous quarter is usually a strong one. If we look at gross profit margin, that's up 230 basis points year over year and 70 basis points quarter over quarter. Then, with regards to net sales by area, by geography, plus by category, well, Greater China is down 8%. We've seen that coming from a mile away, right? With all the reports coming out, that was a given. It is still growing a little bit in Europe. It is decreasing in the Americas, decreasing in Japan as well. Rest of Pacific has decreased as well. With regards to net sales by category, iPhone is down 10%, iPad is down 17%, services is still doing amazingly, up 14%. Of course, services is also higher margin, so that's definitely helping the overall business. Other than that, Mac did perform quite well. It did grow year over year. And so if we look at Apple's revenue, right, throughout the last couple of years, I mean, is this a growth company? No, I don't think this is a growth company, and this is not just me saying, oh, I don't like Apple. No, I still think that this is probably one of the best businesses ever created on the planet. But if you purely look at the numbers, this thing has not grown at all. Now, of course, the big positive thing here is that services revenue, being higher margins, is taking more and more of a share of the overall revenue, while the other segments are shrinking a little bit, which, of course, helps margins, software versus hardware. But how long can this continue until the market notices that, well, this is a company that is not growing anymore? Why should we give it such a high premium? Right now, yes, it is true that in the last 12 quarters or so, if you put the average year in free cash flow at 100 billion, times 12. So yeah, this is what you get. It's pretty amazing. It's pretty remarkable. But again, does this deserve such a high premium? Because for a company that has decreasing sales, right, it's down 4% year over year. Okay, if you add the buybacks, then what? You are basically growing less than inflation. So I don't really see here why Apple deserves such a big premium. Now, of course, we know the markets are always forward-looking, and so, like I've said in previous videos, I still think that Apple will come out with AI products, AI services that they will be able to monetize quite well. A huge refresh cycle with regards to the devices is probably going to happen, and since this is already a couple of quarters that we've seen some weakness, year-over-year comparison are going to look quite good for them. So maybe that's one of the reasons why the market is giving this company a higher premium. Could very well be. Plus, it's still Apple, right? It has a huge install base. Whatever they release, most of their fans, most of their customers are going to use those products and services because the Apple ecosystem, whether you like it or not, yes, walled garden, etc., but it is extremely well built. Now, with regards to the next quarter outlook, again, not much growth. They expect to grow revenue low single digits year over year, in spite of a foreign exchange headwind of about 2.5 percentage points. They expect services business to grow double digits at a rate similar to the growth we reported for the first half of the fiscal year, and they expect iPad revenue to grow double digits as well. They expect gross margin to be between 45.5 to 46.5% and OPEX to be between $14.3 billion and $15.5 billion. Now, before finishing it off, I just want to compare Apple to Alphabet. I know it's not apples to apples, no pun intended, but Alphabet is also buying back quite a lot of shares. Alphabet is also now paying a dividend, but Alphabet is growing faster, and yet, you see here Alphabet at a forward PE of 20.9 times. Free cash flow in the last 12 months is a bit higher than Apple's, 25.3 times. But then if you look at price earnings to growth, 1.49. So again, you have to ask yourself the question, is the market just giving Apple such a high premium because it is Apple? If so, then it doesn't really make that much sense, right? Because you can buy a company like Alphabet, who again also buy back a ton of shares, pays a dividend, is growing faster at a cheaper price. So yeah, I mean, investors do have to ask themselves this question. Lastly here, if we look at the graph, yes, we had a double top, one top here in July 2023, the second one here in December of 2023, and then we went all the way downtrend up until $165 in the last 2 weeks or so. Right now, with the rise pre-market, we're going to go well above the 200-day moving average, which sits at around $177, the 51 at $173, and the 21 at $170. RSI momentum is going to turn positive here, still going to be neutral, but overall there is going to be quite some momentum with regards to the stock. Of course, with announcements of probably new products coming very, very soon, momentum is starting to pick up. And so, going back to what I said in previous videos with regards to Apple, an Apple position is basically an equivalent of your cash position. It's having a position that you don't really expect to grow that much fundamentally, right? But yes, you're getting a dividend payout. Yes, you're getting buybacks. Yes, you might be getting some growth in the next coming quarters because of the weak performance of the previous quarters, plus the release of new products, AI services, which could be higher margins as well, should help the overall business. So I see this as another type of cash position, but a cash position that has a little bit of upside. But overall, I really don't think that Apple is a growth company. I don't think that it deserves such a high premium, especially not if you compare it to other big tech companies that are growing faster than it is right now. Of course, I can be completely wrong. If you think I am, let me know down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.